The NSE starting this week very nicely indeed, up about 0.25%. Of course, down about 1.1% last week. The early gainers include Dangote Cement, Nigerian Breweries, Oando, and Sky Bank. Let's now cross to the stock exchange, where Andrew Sako is standing by to give us some perspective on the markets and analyst with Investment One. Andrew, thank you very much for joining us. So I guess it's great to see that the market is starting the week on a positive note, but many will suggest perhaps a slight bump upwards is not something to get too excited about. What are your expectations about this week? How do you see the market trading this week?
Yeah, well, Wale, you're very right. We have seen some increase in the index, 21 basis points so far, and this is majorly led by industrial giants, Dangote Cement, like you rightly observed. When you juxtapose what is happening right now against the fact that for almost 10 days running, probably with just 1 day punctuation, we saw the market truly going down. But we began to see a reversal of this, which to me was some level of correction to the market, coming from Thursday gains and obviously Friday and then today. What we have basically seen is the longest decline, for those 10 days that I alluded to earlier, in a very long time, consecutive days of losses. For that kind of decline, basically what the market has done is to offer investors another opportunity for re-entry. Because
do you see them taking that opportunity? Because if you look at the data,
yeah,
I think the volumes traded will suggest whether or not they are aggressive right now. Do you get the sense that investors are aggressive about buying shares now?
Investors were actually a bit cautious when they began to see the decline that I made reference to earlier. And usually when the market begins to trim down, quite a number of investors tend to get jittery, forgetting the fact that fundamentally, if valuations have not altered, particularly in the negative, all that is happening is that such stocks that have suffered decline majorly just present another entry point that they need to cash in on. But of course, the psychological tilt is, yes, I can wait a little longer, hoping that these prices will continue to go down.
Do you think that's what's happening here? Do you think there's a lot of money on the sidelines? Because if you look at the fixed income market,
yes,
Andrew, a lot of people are going in there now.
That's correct. The fixed income market has provided some comparative substitutes, for investors in the equities market. But if you look at it also over a long haul, the fact remains that the fundamentals in the equities market do not give any indication for panic or for concern. Rather, they present also an opportunity for investors to keep looking at it. Yes, for portfolio rebalancing, some people want to put some money in fixed income securities, but that itself, I think, and that's my opinion, it's not going to last, because very soon we begin to see yields in the fixed income side trimming or contracting. As a matter of fact, what was expected in that market was a kind of surge in activity. But on a relative scale, we haven't really seen too much of activity in that regard. So I think the equities market still presents a very comfortable front for investors to key in.
Andrew, what's your take on the banks? And we've more or less seen all the results, except for perhaps First Bank. Your thoughts about the banking sector as an investment opportunity?
If you look at the valuations of most of the banks, average PEs range within the 6 region, and that compares to the entire market index favorably. One of the fears in investors' mind is actually the likely impact of government's decision to put aside to some extent the funds of government, which decision the central bank took recently. But I dare to say that much of the effects culminating from the CRR issue have largely been impounded into valuations. We've seen a First Bank trending from about 19 naira to where it is currently at about 16 naira. We have also seen some moderations in some other banking stocks. So basically, fundamentally, the banks still present a very good buy for investors. That's my take.
All right, well, we'll see if it plays out as you say. Of
Right.
course, we are still expecting that first bank result, like you noted there.
Yeah.
Okay,
Yeah.
but talk to us about how the market is gearing up for the launch of the X-Gen. A lot of people say it's going to be revolutionary. A lot more people will be invested in the market, particularly retail investors. The reach of the market generally is set to change dramatically when that system gets launched and, of course, when it gets up and running. Your thoughts about what this could mean in terms of a catalyst for the market in the second half of this year?
Yes, I also want to make mention, even though I'm not speaking for the stock exchange, the fact that some of the innovations the exchange has brought to play, including the X-Gen under reference, have been quite innovative and have largely pulsated the market for greater investment opportunities. The flexibility with which these actions is bringing about is one of the things that will drive the market going forward. One of the key things that will happen, obviously, is the increased level of participation in terms of market participants. It will also create some fluidity, even in terms of the listing, rather the listed securities, and even those that are aspiring to get on board. So by and large, we expect that some of these changes, even though they may not give the effects, on the very short run, but on the longer haul, obviously it will impact positively on the market.
All right, so in that context, which stocks do you like right now? Which stocks should we be investing in?
The bellwether stocks naturally will have my picks. Dangote cement that we referred to earlier is getting so far. It presents a very good opportunity. I think largely that most of the banking stocks also present a very good entry point at current valuations.